Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So here we have the situation when it's extremely difficult to trade in general in the market right now, because obviously on the back we have a big redistribution of the assets among the different global spaces. So it seems some flow starts from out of the United States to some other assets, mostly in European Union, just because when market behaves in this way, it means that there's more than the technical reason stands behind. So because in the current upward action, market totally ignores some technical limits, some technical barriers, limitations in the way of the overbought levels, for example. And this happens. This takes the massive character. This is not just typical for just on the euro currency. I would say there's some kind of the massive exodus. So if you take a look, for example, just take a look on Swiss franc. So it's just outstanding downside action here. So it's big demand for Swiss franc. You could see the same on euro currency. If you take a look at the dollar index, it stands in some free falling, something with this kind. 10-year bonds yields are strongly dropping, and actually you can see the market right now stands now at target 4.2 that we talked about last week. Here we have, by the way, kind of the regardless triple to buy. So what does it mean? It means that currently we should apply a bit more flexible approach for treating the barriers for upward action. So we have to work right now in some kind of the environment where market is gravitating to higher action because of some fundamental reasons. This is not pure technical reasons. And from that standpoint of view, we should give market some more room to be free on the upside. Despite that, here we might have some levels. So for example, if we take a look at the monthly chart, we talked about deep overbought levels. Take a look how the June candle is closed. So closed on the top and the tail closing. This is a very strong performance. This is sharp acceleration here. So no doubts that we will see 120 area at some day. But now, since we have the new months have started, so we have new level for July, which stands around 118. This is new overbought. What does it mean? It means that based on the previous situation, you can see here was spike and penetration of this level. Last month it also was the same approximately penetration. So it was approximately here's 115.50 and it was 117.80, approximately 42 points. It means that 120 area, despite that market stands at overbought, theoretically might be reached in July. So if not 120, then probably 119 is definitely should be reached, whereas actually stands major OP. Besides, don't forget that market is gravitating to the major levels, and you could see that now market stands very close on a monthly scale to the OP target. It means that here is it will try to touch it, so it's coming to it. That's the major conclusion that we could make currently on long-term charts. What does it mean? It means that here we should apply a bit softer rules for position taking on the long side. So do not wait too deep retracements. Carefully watch for tendencies that we have, especially short-term tendency, and just control the major validation point of this tendency. Until they stand, we could try to take position of this tendency. So on the weekly chart, we already talked about this nearest target stands 1855. Here is no overbought. On the daily chart, now we seriously could consider the cluster target of the 118.86, 118.24. So this is also around daily OP. This is 1618 extension of this butterfly and completion points. At the same time, we are not interested with any levels below 114.50 because tendency is the short term. So we can see that high highs, high lows stands inside this channel, and we're working only inside of this range. Why? Because if market drop out of this range, it means that deep retracement starts. It means that this tendency stop working, and we will have to change training plan drastically. First, we will be watching for some stronger retracement, and then we increase the scale, where this tendency will become just part of it. In some way, some kind of the big ABCD or something like this, or deep retracement down. But for now, you can see swings stand small, and that the tendency that we're trading. That's why, to keep this tendency valid, market has to stay above these lows, and even higher, just because you can see that 115 is daily oversold, 115.30. So in fact, all things that we need to control is just this upper direction. What we could say about this area, you can see that market here shows some even acceleration, so it's trying to break out of the range, which is also potentially strongly bullish. What particular barriers we have here is, first, on the euro currency, we have XOP has been completed on the fall time frame chart. We're trading it for a long time already. And butterfly, but butterfly mostly has been ignored. So you can see market just was standing here a bit and then move higher. So here's we have the XOP. On other markets I already have shown you. So we have this support area, although it's still a question whether market will stop here. And what's more interesting, on the dollar index, we have 1.7 target has been done for now. Euro currency has reached it last week, but dollar index is just come to it. So maybe these two altogether, these targets could trigger some minor bounce. But since market stands very close to the important targets, I think that we shouldn't consider too deep pullbacks. So first level that I think we could keep an eye on, it will be the nearest one, and even higher, so somewhere around 1750. Retracement probably will be not extended. So that's the first level that we could keep an eye on, because here, as you can see, was minor consolidation, and market already stands out of it. To keep bullish tendency, market should stay outside of this consolidation. If by some reason it will drop back and down, it means that deep retracement can happen. From that standpoint of view, we could use very tight stops in trading this market, trying to take position above this consolidation, using this level for possible maybe stop placement or something. Because here market either has to keep an upside action right from here, from above this area, or deep retracement will start. In what shape it could be, difficult to say. Maybe it will be kind of the hand and shoulders, some ABCD somewhere back to the 116 area. That might happen. But for now, based on the performance, it seems that retracement should be very small. So that in towards what we have currently on the euro currency. As I said, this trading process this time will be really difficult. Situation will be really blurred. We will not have really clear patterns that you actually like to use. You have to make the decision in some kind of when some constant pressure exists on the market and overall price performance shows very small pullbacks. It makes it difficult to find good area for so-called safe entry. So here is risk a bit higher than usual. But that's the environment that we have to deal with. So let's keep watching and see what will happen.